Samuel, looking at how we saw market trade play out yesterday, a bit of negativity coming to the market, but only just. No surprise, given the fact that we've actually seen a very strong performance over the last 2 weeks.
Well, I think that was quite a lot had to do with the huge activity on the Kenya Airways counter, but I think we have still got the critical aspect, which is local investors being very active on the market. We have had over 60% being locally driven, and that is actually what we had initially said would be a very good turn for the market, because what we've had in the last 1 year or so is very low local investor activity and mostly foreign-driven activity, which really stays around the blue chips, and that wasn't actually boding well for the market. And this, of course, is because we have had a very strong dividend payout season, and those dividends are attracting local investors to the market, which I believe was actually what companies meant to do. The signaling factor is working, and it is actually helping shore up the market.
Yeah. Well, I mean, one company that is, of course, starting to gain a lot of attention from the investor community is the likes of Uchumi. We are still anticipating those results. Apart from expecting very strong numbers, the market is also anticipating a very strong dividend. Do you think that this is going to materialize?
Well, I wouldn't expect a very strong dividend. What I would expect is that they will start paying dividends. But in my view, Uchumi is a case study. I mean, being the first company to actually come out of receivership and back into profitability, now to pay a dividend is actually a remarkable feat. And I believe that investors will definitely be rewarding that stock going forward in the medium to long term. I would expect that investors in Uchumi are a very happy lot, and they should, they should be deservedly. And the thing is, with Uchumi, they have the best cost-to-income ratio on the supermarket chains in Kenya, and I know that they have done a very good job in the turnaround. They're doing a very good job in terms of running the company, and so I believe it is a company that I would want to have a stake in.
Samuel, we know that Uchumi might be eyeing out Sudan as the next point of growth for them. Are you eyeing out Uchumi as a potential investment case?
Well, I believe so. The thing is, well, for now, I believe that it would be also good for them to concentrate on the gains they have made. But of course, they can't linger on that for too long. Otherwise, they're going to be left behind. We have seen the retail supermarket chains actually grow exponentially in Kenya. There are those that came in to fill the gap left by Uchumi, like Tuskys and Ukwala, and they have actually grown quite a lot since Uchumi began having trouble in the market. And I believe that now Uchumi has actually shown that they have the muscle and the ability to actually grab back some of that lost ground. Yeah. And I believe that they should actually capitalize on that now that they're on a winning footing.
Samuel, looking at some of the headlines coming through today in the newspapers and quoting from the Business Daily, Peter Mutshaka, the largest shareholder in troubled motor firm CMC, they say that there's been a coup initiated by the Capital Markets Authority. What is your sense on the most recent developments and, of course, a very troubled company hitting the headlines for quite some time now?
Well, I think that it's about time that we had the capital markets take decisive action in this issue, and I think that we do need to see CMC coming back on the market. I believe it's not good for the company to have these boardroom wrangles. So I think that the regulators' activity and the ability of the wrangles to end, the board to actually come to some agreement and get these wrangles over would actually bode well for the company, because I do believe that as long as those wrangles continue, then investor sentiment is going to be negative, and that is not going to be very good for shareholder value.
Well, speaking of negativity, Kenya Airways coming under significant pressure, $250 million cash call at around 14 shillings per share, 32% discount, Samuel, to the 3-month average share price. price. Lots of volume going through this company. Do you think it's going to recover going forward?
Well, over 40% of the cash call is already going to be taken up by the government of Kenya and KLM, who are the major shareholders, which means that we are really looking at almost half of the actual cash call, which again, if you look at Kenya Airways, they did have some very difficult times in terms of shareholder value. I remember at some point the share price had gone to something like, I think, between 3 shillings and 7 shillings. But then it has actually also rewarded shareholders very well. So we do have quite a big chunk of shareholders out there who are very happy with Kenya Airways in the past. In as much as the share value is right now quite low in comparison to where it has been, you know, on the high points. But I do believe that Kenya Airways is a company that Kenyans have always given the time of day, and I do expect that there's going to be strong activity on that, and it's going to pull attention to the market. Rights issues, IPOs, usually pull local investors to the market, and hopefully, I really hope that this actually, the share price goes up after the rights issue, because if that happens, then we're going to see a very strong rally after that.